everyone, welcome to TSAM Digital. I'm Ana Luisa, and today I'm joined by Michel Finzi, Managing Director and Head of Product Management at Enfusion. Welcome, Michel.
Hello, Anna. Thank you. It's great to be here with you and the TSAM audience today.
Michel, would you like to do a little bit of introduction? Tell us a little bit about yourself and your work and Enfusion.
So my name is Michel Finzi. I am Head of Product Management for Enfusion. For those of you who don't know, Enfusion is a flexible multi-asset class investment management platform we offer to asset managers on a SaaS basis. We were born in the cloud, so as such, we are cloud native. So we provide front, middle, and back office product modules, which are powered by a single underlying data set, which is continually updated in real time. Our platform can be deployed on a modular basis or end-to-end, and was designed to interoperate with an asset manager's internal systems and their trusted third parties. We've been in operation since 2006. We serve hundreds of clients around the world from 10 locations, and clients consume our services via desktop, web, and mobile applications, and or through a fully supported set of APIs.
So Michel, as Managing Director and Head of Product Management, can you speak to the challenges that you're hearing from investment managers in the industry?
So the challenges we tend to hear about come in a few broad categories, but they tie to general themes in the industry. So first, it's really one about how to maintain and grow revenue in the face of continued fee pressure, increased competition, and margin pressures. And this is either by opening up new markets, by extending into new asset classes or geographies, or offering new products, or maintaining existing revenue by providing more transparent reporting, new product mixes, or enhanced user experience. Second, how to contain the cost of operating their businesses, particularly when having to contend with often outdated technology stacks that don't really scale, the advent of new regulations and directives, the proliferation of new data sources, changes in client demand, and when considering how to support the front office's ambitions, forward-looking ambitions and plans. Finally, the challenges around performance, how to generate consistent investment returns as they need to analyze new and more data sources to derive insights, as portfolios and strategies themselves are becoming more complex to manage, and as portfolio managers and analysts teams are confronted with more dimensions that they need to vet companies they're considering making investments in.
Brilliant. And how can SaaS platforms help to mitigate these challenges?
So the term SaaS is becoming much more common with respects to financial technology. Truthfully, many applications or services are offered on a cloud-native SaaS basis, so the industry has some experience with them, and it's growing. But the term also comes up in some cases where legacy technology providers who were originally designed to be delivered on-prem and in dedicated client deployments are now asking their clients to lift and switch to their new SaaS-hosted version. While this constitutes SaaS, this is akin to running the same application, but with servers located in a different spot. And while they certainly have their strengths, not being natively built for this delivery mechanism, asset managers can expect a period of transition, and the process of upgrading, things like the process of upgrading to newer versions, is still likely to be complicated. SaaS-based companies like Enfusion that are cloud native offer some really important advantages. They eliminate the need to manage infrastructure or spin up data centers and manage servers. So in effect, zero technology footprint. They're always on and high availability. New enhancements and innovations as they become available are delivered seamlessly and without the need to undergo costly upgrade processes. They can provide flexibility to scale up or scale down and give asset managers the optionality to access the functionality as it is, or again, via APIs, so they can incorporate those functionalities into their own systems. And then finally, can provide a more coherent data management, aggregation, and counterparty connectivity experience.
And you mentioned alternatives. Are you seeing any trends, and what are asset managers asking of you?
Yeah, from what we've seen, asset managers, large and small, are looking to alternatives, multi-asset, private markets as their engine of growth. This can either be through organic growth or through acquisition. Whether it's to offer new and different products to their existing client base, to increase distribution, to attract new clients, or if they believe that the economic or interest rate cycle changes to those cycles are upon us, there's been a noticeable shift into these strategies, without a doubt. The reality, though, is that for many firms, this may be a new direction that they're heading in, and this is all new. And so the challenges we'll tend to hear about are many of these firms are using legacy technologies who've built their core businesses around either equity or fixed income centric portfolios, and they just don't scale as easily. When many of these asset management firms start to consider what they need to do to be able to make the shift to multi-asset class, many come to realize there's just not a lot of choices. So they think about building in-house, but that's likely difficult and would likely require a lot of training, the allocation of resources, and probably take a long time and cost a lot of money, because they really don't have full end-to-end experience with all of the relevant asset classes. So many, will look externally.
It's really fascinating. And I was also wondering, for firms that are managing a range of asset types, are you seeing any specific operational challenges?
So Enfusion has supported multiple asset classes and different investment product structures since inception. We were established this way. As such, when we engage with asset managers who are venturing into these areas, we can speak from firsthand experience and help guide them through what they might need to consider. In many cases, this involves helping them think through in some cases, issues they have or are likely to encounter. For example, support and valuation of the different instrument types and subtypes that they are likely to invest in or employ, having access to a robust and dynamically updated investment book of records, which is updated in real time with accurate data available at their fingertips such that they're able to process transactions once and know that everything is being updated, or leveraging one and two-way connectivity to the leading counterparties to helping them achieve more STP, more efficiently financing, managing financing terms and counterparties is something that is a bit more nuanced in the alternatives and multi-asset world than in other places. And then finally, to the extent that as their business grows, they're adding more and different types of data, bringing all of that data into one place with the ability to incorporate that with their core, fundamental data that's managed within Enfusion, and report upon it as granularly as required. Those are the kinds of things that we will tend to talk to them and sort of help work them through. Add to this our experience, with the middle and the back office lifecycle management in general. After the trade is made, many clients are also interested in hearing about how our software can be combined with our outsourced or co-sourced managed services to bring operational efficiency and transparency to this important part of the investment lifecycle.
Thank you for that. Finally, I wanted to ask, do you have any advice for the audience?
Look, the choice of technology lies at the heart of an asset manager's ability to contend with many of the challenges that we've been talking about. And in many cases, it's also a key determinant in their ability for future success. And so we would recommend that when evaluating, cost drivers and considering how to set up your organization for that future success and to achieve your expansion plans, consider the total cost of ownership of maintaining the status quo, particularly the hidden costs of upgrades, staffing, and the opportunity costs associated with systems which can't flex in the direction that you need them to. When going through the process of considering an upgrade, think about which functions and applications are critical to your establishing competitive advantage and which are suitable for a technology company to help you with. Then identify potential technology partners to work with and look for look for them having experience at delivering and supporting their service at scale across asset class and strategy type. And finally, give serious consideration to cloud-native SaaS-based solutions. I think you'll find they can provide the flexibility, scale, smaller technology footprint, and reduced TCO you might be looking for.
Thank you very much for that, Michel. It's really fascinating speaking to you today. Look forward to speaking again.
Well, thank you very much, Anna. It's been great speaking with you.